Hey guys, how's everybody doing? Probably no one's here. I didn't pre-publicize this. Let's share this screen and see what's going on. Let's see what futures are doing right now. The market's been crazy lately, mainly on the downside. So I have some new charts and some new ways of looking at stuff. But for right now, let's look at S&P futures. How about 30-minute bar, a 30-minute bar chart? Well, there's a daily bar chart. And I know it's a funny color. Gosh darn it. Here we go. Futures are actually rallying. We hit like 55, 56, something like that, about 2 hours ago. What time was that? That was about 7 o'clock, 7:30 my time, 8:30 Eastern. And here we are at 10:20 Central Time. So, that's 11, nearly midnight on the Eastern Seaboard, and it is, and the market is rallying. We bounced from 55, 56, all the way up to 56.30. So that is, what is that? That's a massive rally. 55.64. So that's 35 points. And then it's a 65 point rally in an hour and a half percent. That's incredible. It doesn't look like it. I mean, because these moves are so big, but anyway, all right. So the thing is, how high does it move before it's time to sell it again? Because every other time lately on this 30-minute bar chart that it's moved up, it got close. It got up by the 50 period moving average, but in any event, and then eventually sold back off. So, all right. So here's what I wanted to show tonight. I wanted to look at a long-term chart and try to figure out what's going on right now. For right now, futures are bouncing. This is extremely, extremely short term. Let's step back and take a look at this. If there's people there, I'll say hi or whatever. I'll answer questions here in a little bit, but good boy, Jackson. Jackson's such a good dog. All right, so here we have on this chart right here, the bottom green line is the 200-day. The top green line is the 50-day. Well, it turns red whenever the slope is downward. So the 50-day started sloping down back, in late February. Well, the 200-day just yesterday or the day before started sloping down. And now, of course, the price is also under the 200-day. So from top to bottom, that the market's gone. Let's look at it on the SPY. I was checking this out a little bit earlier. So on the SPY, I mean, that's been a crazy move. I mean, what's that, like 610 to like 560? They're like 50 points on. It's like, I mean, a real quick 9-10% drop straight down with hardly a retracement inside. But what I was going to say is, if you look back here, it's not that dissimilar from back here. This was just not too long ago, in October of 2023. The same thing. The 50-day had been sloping down for a while, and then we lose the 200-day, and price goes under the 200-day. So, I mean, it could easily be, I'm just saying we have to keep our mind open to all scenarios. It could easily be this scenario where we even lose the 200-day for a while. Then for whatever reason, it looks like things turned on a dime here. I forget what the reason was. But especially, I think a lot of this current situation we're in is news flow driven. So if the news flow improved, war in Ukraine ended, tariffs, over, paused for 6 months, something like that, then we would have a, so I'm saying then we, be prepared. It's possible there'd be a situation like that. So the other parallel is if we go back a little further in time, and unfortunately, it probably looks more like this situation. So this situation, the market pretty much goes pretty much straight down without so much as a retracement, and then right here the 50 days red for a while, then the 200-day is red for a while. This is like January of 2022. Okay, now this was a time that you did want to be out, done, because even though the market had dropped from 480 to 430 and you're mad you didn't get out 50 points before, you look at this. I mean, yes, it rallies back to 460, but it gave you another chance to get out. Then it gave you another chance to get up 460, because then look at this. Then it's at 400 by the end of the springtime, 390, 380. It flushes down to 380. Oh my God, I remember that was terrible. Then it gave you a little rally to sell. Then it went even lower. But anyway, and ultimately it went to 365. So a person that got out here, that heated this morning and got out, it was the right thing to do this time. It was the right thing to do. So will this be like, which one will this be like? Will this be like October of 2023? I guess we could also look at, this isn't as good of a parallel, but we could also look at February and April, March and April, I guess, of 2023. We were under the 200-day for a while. But that was a different situation because we were just recovering from 2022. That was a great time to be buying. There's no two ways about that. All right, so right now, to me, it's looking more like, the bad news is I think it's looking more like 2022. The good news is, just pattern-wise, the good news was even in 2022, the day that we're on right now is right about here. So if we do have a 2022 type pattern, we should get some type of relief rally. And if you're still bearish, then that's the chance. So back in 2022, we got, 1, 2, 3 days pretty much straight up off the bottom, 1, 2, really 4 days straight up off the bottom. Okay. But then it went back and hit the 50-day moving average and couldn't take the 50-day moving average back. So we'll be looking for that. So now if something like that happened, the 50-day moving average is up, let's put a couple of days on it, or 3 days, maybe that would be like 583 or something, 580, maybe a rally up into 580, 590. Plus that would be a confluence because there is this zone up here that I'm looking that's in the same area. But at the moving average, it gets up here, the market rallies and then falters, then that's another chance. That could be another chance. No, there's no guarantee that'll happen. It could keep going straight down. I don't know. I mean, we could go back to look at the chart in 2009, but I don't want to get too depressed. So let's just, we got two scenarios. Let's hope it's like 2023, but if it's like 2022, we just have, at least we're aware of it and can plan accordingly. All right. So, here's a chart of volatility. I like this new technology I got. All this is just shows you the trend, and I just put in 50 and 200 days. So it's just real good. I mean, I used to show this. I used to have this Max's volatility trend following system, and I used to do something very similar to this, and I wanted to program it in to whatever this program is, but this thing right here is close enough. So this is good, and we look at this kind of stuff all the time. But whenever volatility is a buy, so a green line on volatility means a sell on the market. So look at right here, the system went to sell. Now it doesn't, that's at 598. That would have been good to I should have listened to that. I was still thinking what to buy the dip, but I wasn't listening. But it doesn't always work. Look, the system up here said sell, and that was at 586. But then the market pretty much rallied, and that would not have been a great time to sell, especially not for trading wise, because you had some good bullish trading. So it doesn't always. In fact, if it always gave you the right thing to do, I mean, everyone would do it, and then it wouldn't work again. Oh, this is a terrible one. It told you to sell right here 1 day before the August low. So it doesn't always work. But I do like how it's big and easy to read, and so I'm going to keep these charts on just for illustrative purposes. So anyway, but you can see we're in a definite bull market for volatility any way you look at it. Here's VIX of VIX, volatility of volatility, same thing. We're in a bull market for this one as well. Now, this one's been more instructive because watch, if I overlay the bottom chart on it, well, not really. This one actually said to get short right here, and the market's gone straight up for a long time. Anyway, I think lots of times you need to look at these things in the smaller time frame. And so here we have in the smaller time frame, the last trade's been wonderful. It said to get long volatility with the Monday the 24th of February, market was at 598, and here we sit at 560. So that would have been a good place to get long volatility, i.e. short the market. But it doesn't always work. Here's an example back here. It told you to get short the market. Then the SPY was at 590, and the SPY went to 575 a couple days later. It's not a bad trade. Anyway, it's whatever. They don't always work, but I'm going to keep it up there, and it's one of many things we can look at. I just like to, more than anything else, just to follow the trend of stuff. And when volatility is trending up, it's not great for the market, obviously. All right, so here is a chart of bonds, TLT, and it's been trending up since Friday, the 14th of February. Really, before that, it gave a false sell signal that only lasted 1 day, a whipsaw, and another false one there. But it's actually been trending up since TLT turned around, made a bottom, and just the mechanical trend following system would have had you in at 87, and here we sit at 91. All right. Let's look at maybe USO. Oil's the opposite story. You always hear about funds that do trend following, commodity, CTA trend following, or whatever. They have more sophisticated systems than this, but you can pretend you can do these types of things with options and try to stay on the right side of the trend. And you just try to stay in call options or selling puts whenever you're in a major trend like that. But the opposite in oil right now, if you're trading oil, you would want to be selling rallies or selling call spreads, buying puts, selling futures. So that's oil. What else? Let's look at Bitcoin futures. We should have looked at this thing first. So I'll first look at Bitcoin just on Coinbase, Bitcoin versus the dollar, because this is a continuous chart that trades on the weekend. So, but you can see just from a trend following perspective, at 88,000 on this time frame, the 30-minute time frame, the chart rolled over, and here we sit at 79,000. The last time it did that, it rolled over at 97,000 and went down to, I don't know, like 80. I don't know. That was actually back because that. All right. there's lots of whipsaws in these short time frames. I mean, it's tons of whipsaws. The bigger time frame on Bitcoin though is still, it's kind of like the market. So it's that this, I guess, is the one we need to focus on. The 200 just rolled over just a few days ago. The 50s rolled over for a while. Are we going to go into a bear market on this thing? And I mean, so the bear market on this, you know, it obviously is going to keep us in a bear market on the other thing. But the thing about a bear market is, if we look back to the chart in 2020, where there was vicious rallies. In fact, let's look back to that chart. Vicious fake outs. Okay, so I think if we are in 2020, we're maybe right here, 2022, or maybe we're probably right here, because we haven't even had our first counter trend rally yet. So we're right here. That's exactly where we are. I'm not saying this will be exactly like that, but so even look from where we are, if we do the same thing, there's a vicious rally soon that's immediately sold, and then a really vicious sell-off to make a new low. But then look at these. This rally right here was totally, I mean, it's like I would have thought, and I think I did think at the time, the bear market's been canceled. It's over because the 200-day got taken out. Market was on the other side of the 200-day for a couple of weeks. No, it didn't matter. It's a huge fake out. And then, you know, within a week later, here we go. This is by April of 2022. The market got under the 200-day and it stayed under and just dropped like a rock. You know, so then if you got out over here, even if you were a little bit late, once you saw that, you felt a lot better about it. But because then the market dropped, you know, absolutely like a rock, down to 380s by mid-May. You know, that was probably option expiration May 20th. You know, 380, man, that was crazy. But then look at that. So, but then that was a crazy rally from 380 in a couple of days to 415. Vicious bull market rally. But then right after that, the worst bear market action of the entire time. You make a new low and you have gaps down, one gap, two gap, three gigantic gap down. And then make a new low. And that new low takes you down about 30% on the year. I mean, that was a crazy year. I mean, I'm not saying we're going to have that, but if we do have that, the only good thing was there was plenty of good trading opportunities in there. There'll be some counter trend rallies, and then but the counter trend rallies, if this is the real deal, like 2022, you know, and things don't get solved pretty quick, then it probably will kind of look like this. But then that'll also, the counter trend rallies will be nice setups to make adjustments to your portfolio and get more defensive. So we'll just trade the chart that's in front of us, right? That's all we can do. That is all we can do. That's all anyone can do. All right. I appreciate everyone for being here. Thanks for being here. Thanks for watching from Hong Kong. I appreciate you. Yeah, Brandon. How have you been playing short options? I don't know if you've been watching the morning show, and I really haven't recommended any trades or anything. I did a couple of trades last week, earnings trades, but once the market goes like this, I played puts a few weeks ago, and I've just been rolling them down. I mean, I played a couple of trades last week, but I made enough on my puts this week that I've already made over my goal of what I need to make for the week. So it's whatever. But yeah, it's just, for me, it's puts. But the thing is, it's not only puts. You can also when the VIX term structure is inverted, is what they call it. Or it's the way the VIX curve is. But anyway, when it means that volatility has a tailwind. It means that there's no longer a tailwind to selling options. It means all of a sudden that it's the opposite. There's a tailwind buying options. It doesn't mean you can buy options indiscriminately, but it's a lot easier to. So what I do is I will try to, try to just pick spots to buy puts. I love buying puts whenever it's the term structure is elevated or whatever, or they call it inverted. But it just means there's a tailwind. Okay, so look at this. Let's check this out. Look at this chart of NVIDIA. Look at this massive mega trend on NVIDIA. This, as far as above the, it switched at 19 and it just recently and it hasn't death crossed, but on NVIDIA it's the same thing. Both the 50 and the 200 are both sloping down, and it's probably fixing to death cross. I mean, that's been a hell of a run. That's been a hell of a run. But look, this last run, it went from like 3 to 24. That was like an 8-bagger. And that was, after 2020 into 2021, that was a crazy time. From the high, it went from 3 to like 33. It went from a 10-bagger. That was the first time that crypto blew up. But it just, I guess that just happens. Let's see, I need to put this on log scale, obviously. Logarithmic, so we can look at this better. But is this going to be gosh damn it. All right, sorry about that. My apologies. But NVIDIA, same thing as the market. It just rolled over and you didn't want to be anywhere near it. Even after it looked like it was too late and it death crossed, it was at 21. And you would think, okay, that's way too late. It's too late to get out. Heck, because I wanted to get out at 33. I got to hold. Well, I don't know. I mean, it went down to 11. So, it's making the death cross at 21 look pretty good. So, not saying that that's going to happen again this time. Let's go back to the time before that. Now, this was a heck of a run. The time before this was from 2015 to 2018 bull market. This thing went from 50 cents to, well, by the time the death cross hit, it was $5, but it actually had been to like, $7. Okay, but then by the time the death cross hit, it's $5. And you think, oh shoot, no way I'm not going to get out. It's not, but then it went lower. I mean, it went to $3. And then by the time it crossed again bullishly, it was at a lower price. You could have got back in right there. In fact, so that would have been good to get out that time. So, I mean, if we do death cross on some of these major ones, I guess it sucks. But what's going to be great? It's going to be great for when the trade on the backside of this. I don't know how long this is going to, the market's going to be like this. But when we get on the backside of this, look at any of these trades on the backside of a situation. Even after 2020 or whatever, the market went from on NVIDIA or whatever, it went from 6 to 24. It was a 3-bagger before we got a bearish death cross. But then the market, they lost about 60-70% of its value. That's the problem with these high beta growth stocks, or it's just kind of the way it goes. Anyway, so that's NVIDIA. What else? Let's look at Tesla. What do you think about Tesla here? Tesla hasn't death crossed yet, but it's getting close. I mean, it's so far under it. It would be so late if it did death cross. By the time it does death cross, it's just a confirmation that it sucks, but you should have already been out, obviously, a long time before. But if the market's bad enough, like it was for Tesla, in 2022, even after the the death cross, and the market was for Tesla was at 239. Within a few months, it hit 100. So it lost another 60 or 70% after, past that. So Tesla's kind of a tough case here. Let's look at Russell's. Another tough case is a long time frame look of Russell. Okay, now Russell hasn't death crossed yet, but it's closer than any of the other ones. Like I say, the death cross is ridiculous. It doesn't mean anything. I mean, one thing you can tell is a lot of times it means about half the move is over. And so but even if that's the case and half this move is over, we could still have some nastiness in front of us. I don't know. Let me know where you guys are going to buy the dip. I appreciate everyone for being here. I recorded a video last night where I reviewed QDTE and I put it on private, and I haven't played it yet, but I'm gonna as soon as I'm done with this video, I'm gonna go put that video up. And I don't know, you guys might like it or might not. It's about a 20-minute video, and I use the script and everything. I haven't made one like that in a while. And I compare triple QI to QDTE and some other stuff. So anyway, well, I appreciate you guys for being here. I appreciate you guys for being here, but it is late. So I'm going to let you guys go. But I just wanted basically to make those two comparisons. Is this 2022 or is this 20? It could be neither. But once again, just for the people that turn in late, we're either right here. We're either right here. We've been going up for a while. Then we sell off. This is the 200-day. So that would be, this would be bad if we're right here. Because the market, that was 2022. But the chart and everything, we could also make a case that we're right here. So every day that goes by, we'll get more clues. I'm thinking it's more likely that we're back here. It's probably, I'm leaning 60% that we're back in this situation, 2022, than the more recent one. But I'll try to keep everything in perspective and everything. And you guys do as well. Be watching the morning show, and I'll have a live show on in the morning. All right, guys. I appreciate y'all for being here. Have a good one.